All right, let's dive right in. Today, we're going to pull back the curtain on a topic that's a huge cornerstone of building wealth: real estate investing. We're going to break down the basic principles, talk about the amazing benefits, and show you how the pros actually decide if a deal's worth it. It's the question we all ask ourselves at some point, right? You work so hard for your money, but how do you get that money to start working for you? For a ton of people, the answer is investing. And real estate, well, it offers a really powerful way to do just that. And let's just be super clear from the get-go. Yeah, there are a lot of cool side benefits like pride of ownership and all that, but let's cut to the chase. The number one reason, the main objective for investing in property is to make money. It's really that simple and that powerful. Okay, so with that one goal in mind, making money, let's explore exactly how real estate pulls it off. Because it's not just one single thing, it's actually a combination of a few different factors all working together. We're about to unpack what I like to call the 4 superpowers of real estate investing. Seriously, these are the key advantages that really set it apart from other types of investments. So, let's start with the one that literally puts money in your pocket every single month.
First up, we've got cash flow. Just think of it like this. You collect all the rent and then you pay all the bills. The mortgage, the taxes, insurance, any repairs. Whatever money is left over at the end of the month, that's your cash flow. It's real, spendable profit, and it's how a lot of investors build their own little income stream.
The second superpower is appreciation. Now, this one is the long game. You might not see it happening day to day, but over time, as the economy grows and more people move into an area, the value of your property can go up. A lot. This is where some serious, life-changing wealth can be built.
Next up is a huge one: the tax shelter. The government gives real estate investors some really powerful tools. You can deduct things like mortgage interest and property taxes, and you can even deduct for depreciation, which is like a paper loss, all of which can dramatically lower your taxable income. And we're not just talking about the income from the property, but sometimes from your day job too. And believe it or not, the tax advantages don't even stop there. They continue when you sell. Just imagine making a huge profit on a property and then being able to legally just kick that tax bill down the road. Strategies like a tax-free exchange let you do exactly that, so you can roll your entire profit into your next deal and make your money grow even faster.
And the final superpower is that real estate is an amazing hedge against inflation. Think about it. When the price of everything else, gas, groceries, you name it, goes up, what also tends to go up? The value of your property and the amount of rent you can charge. It's a fantastic way to protect your money's buying power when a dollar just doesn't go as far as it used to.
So, those are the 4 superpowers: cash flow, appreciation, tax shelter, and inflation hedge. Awesome, right? But how do you tell the difference between a great investment and a total money pit? Well, it all comes down to the analysis. Let's take a quick peek at how the pros do it. But hold on, before we even touch a calculator, we gotta have a little real talk. Every property has ongoing costs, and those costs can go up without warning. A smart investor absolutely has to have a financial cushion, some cash reserves to handle things like vacancies or a broken water heater without totally stressing out. Okay, you ready? Let's get into the most important calculation that all the pros use. It's called net operating income, or NOI. And trust me, it's simpler than it sounds. You just start with the maximum rent you could possibly collect. Then, you subtract a little bit for the times it might be empty. After that, you subtract all your operating expenses, everything except the loan payment. And that number you're left with? That's the NOI. It's the pure, unadulterated profit of the building itself. So what you do with that magic NOI number? You use it to find something called the cap rate. You just divide the NOI by the property's price, and you get a simple percentage. This little number is the key. It's what investors use to quickly compare completely different properties to see which one offers a better return. It's a true apples-to-apples comparison. Now, I get it. Running all these numbers, trying to find good deals, it can feel like a lot, right? But here's the good news. You absolutely do not have to do this all by yourself. This is where a good professional real estate broker becomes your best friend. See, a really good investment broker isn't just a salesperson trying to get a commission. They're a strategic partner. They're the one who can help you with everything we've been talking about, from checking out the local economy and running the numbers to finding financing options and just making sure an investment actually fits your goals. So, once you get these fundamentals down, you can really start to think bigger. You can move beyond just one property and start building a whole portfolio of them. And guess what? There's more than one way to climb that mountain. You could totally go it alone, right? That's solo investing. You have all the control, which is great, but you also take on all the risk. Or you could look into something called syndication. This is where you basically team up with other investors and pool your money together. It lets you buy into much larger, maybe more stable properties than you could ever afford on your own, and you get to share both the risks and, of course, the rewards.
And that brings us to the end of this whirlwind tour. We've talked about the court benefits, how to analyze a deal, and the different ways you can get into the game. So the last question isn't for me to answer, it's for you. Now that you've seen how all the pieces fit together, what role could real estate play in building your financial future?